Hello, this is the chart profit video, approaching 3 hours into the trading day, Friday 9th of March. This from the pre-open, we're looking at the EMini SP. This level here is 26.86, that's the 3-month controlling price on this chart. Friday 1 week ago we had a value area printed below that level. This strong downward momentum here with significant selling auctioned the EMini below that important level. The EMini sprang back, and on Monday we had the first of 4 value areas printed back above that level, and we marked aggressive buying on that day. Not only that, but those 4 value areas all printed above 2704, which is this dotted line here, which is the half range of the recent high. Across this period here, a 1 month emerged at 2718. And Thursday's value area was built entirely above that level. So in the short term, this is pretty bullish action from the EMini. We have a 4-month value area high up here at 2760, but price now is above these important controlling prices. You can see them here on the current 30-minute chart. On Wednesday overnight, we saw just a couple of probes down to that important support at 26.86, the 3-month, and you can see the price action from there. It's been pretty positive, and we're now printing time up here just above the value area high, the 4-month value area high at 27.60, and price acceptance up here would be bullish. There's always a possible rejection up around these value area highs. Currently EMini is holding that level. If we look at the pulse chart, we're looking at the spider at the top here with the imbalances from the EMini SP marked in red and green. There's the green aggressive buying day. One area of the chart that could do with improving is the breadth in the middle here, so it represents the New York daily breadth indicators that I track. Not convinced about that yet. We have price momentum back above 0. But it would be good to see some kind of confirmation here from the breadth indications, and that would be back to green. Russell 2000 ETF IWM is now leading in the short term. Was a laggard for a while, but certainly relatively picked up in the last few days. Just looking at the weekly structure coming off the lows, I've inserted here the weekend spaces for Saturday, Sunday. We look at Monday to Wednesday's range on this week 3 weeks ago, and we closed up here above that range and above the high of the previous week. Well, not quite, but the high was. We've had a couple of corrective weeks, and this week again, if we look at the range Monday to Wednesday and the close up here, hopefully in a few hours time above 157, and on the weekly structure, simple little system that would indicate buyers on the longer time frame. Just look back a little bit to late January from the high of the Monday to Wednesday range to the low, and we closed here below the low of that range, below the low of the previous week. A real indication of weakness, and that seems to be reversing right now, that pattern. This is the UK FTSE 100 index. It's closed out this week at the high of the week. You can see how relatively this index is lagging, and also the German DAX. Just a quick look at the sentiment indicators. This is my version of the Ridex assets ratio. Come off a little bit in the last couple of days. It's down around 16 at the moment. As we know, it reached a peak over here with the market. Fell swiftly back down towards 10 at this point. Historically, this number here at 16 is still extremely high, but relative to the peak over here above 27, retail traders a lot less bullish than they were at this point. And we've seen here in the public poll from AAII, the bulls percent this week was sharply lower, 26.4%. That's actually down from 37.3%, and that's the lowest bulls percent since the beginning of September. So it's quite a drop in bullish sentiment this week. Bears percent was a bit higher, but as I said here, even though this is the first time in 16 weeks that there's more bears than bulls in this data, it's worth remembering that 9 weeks ago the net, the bulls minus the bears, reached 44.2 at this point, and that was the highest since April 2004. Remembering that these indicators are to be interpreted in a contrarian manner. The Investors' Intelligence, poll of newsletter writers, nothing significant in this data from the point of view of confirming possibly that the market has bottomed and it's rallying here. The only significant thing currently is the fact that we've been talking about for weeks, which is the peak here in sentiment, a 30-year high in bullish sentiment. We're looking at the 4-week moving average, which is the black line here of the net, and this line is worth watching. A break of that is often a signal that there's more upside to come. You look for a recent, or the most recent reference for that line, and this one goes back to the start of 2017. So if we saw the black line, the 4-week moving average of the net, below that point, that would indicate the most bearish sentiment in over a year. In the Lipper US fund flows data, the 4-week cumulative flow is exactly at 0 currently. But for what it's worth, week ending 7th of March, there was an outflow, net outflow this week of $9.8 billion. Been saying day to day in the pre-open for the bonds, the TLT ETF, bond sentiment is very bearish at the moment, which may be a contrarian or may set up a contrarian bullish stance, but the risk of further declines remains high if TLT is below this level 119, which is the major controlling price. And TLT certainly does remain below that level, and it looks as though in the short term that that price is acting as a bit of a barrier to upside. So I certainly wouldn't be interested in the long side of this chart unless we see time above that level. This is the commitments data from last week's ebook from last Monday. New data arriving later today, but you can see the commercials smart money net position up here, more bullish than they've been in a number of months, and large speculators down here, small speculators down here. Not quite as extreme, that disparity, as it was, say, at this point, but getting there. This is GLD, the gold ETF. The minor controlling price was up here, and it has just migrated slightly lower down to 125.23. That's now the 4-month controlling price. Currently GLD is printing above that level at the end of this week. On just a handful of the charts I've seen those minor controlling prices migrating, which is interesting. They haven't moved for a while, but when they move like that at the same time, it often precedes a directional move. So this level to me becomes important on the GLD chart, and we will track this and price relative to that level in the pre-open each day. So here's another migration, or rather an emergence of a short-term controlling price at 89.59 on the dollar index. That's the 3-month. Currently the dollar index prints above that level, but it now gives us a local reference point of some importance. Gold and the dollar index tend to move counter to each other, so watching price on these two charts, gold, GLD, and the dollar index relative to those new short-term controlling prices will be interesting over the next few days. Dollar index back below 89.59 and printing time would indicate a new low. Okay, the short-term controlling price on the British pound was 139.55. That's the 2 months, and that has migrated slightly lower to 138.96. That's the 3 month. Pound is currently printing below that level. Where's it going to be printing early next week? Okay, that concludes, and once again I thank you for watching.